Today is Wednesday, the 27th of February. My name is Christian Blåbjerg. Overnight bullets. Yesterday we had the German IFO figures out, and across the board, the three figures, that is the business climate, the current assessment, and the business expectations, were out a little better marginally better than expected. So this move was supportive for the European stocks intraday session yesterday. The US PPI figures was also out yesterday, and they were a lot stronger than expected, showing that the prices that producers are facing is increasingly a lot lower, somewhat more than analysts expected. We had the PPI year-on-year out at 7.4% versus 7.3% expected, and the month-on-month was out at 1.0% versus 0.4% expected. Also yesterday we had the S&P Case-Shiller Home Price Index out a little better than expected, out at minus 9.1% versus minus 9.7% expected, showing that even though that there is a marginal upside to this number, the U.S. housing market is still deteriorating and contracting somewhat. Then we had the U.S. consumer confidence out, and there was a major breakdown to the downside, disappointing vastly, out at 75 versus 82 point expected. The prior reading was 87.3, so a drop of more than 12 percentage points, demonstrating that the U.S. consumers' outlook for the future is getting darker and darker as they see the economy slowing down. Market developments: we had the dollar weakness more or less across the board, and against euro dollar we printed a new time all highs at 150.47, and Aussie dollar is close to the 2007 high at 0.94. Okay, and stocks, we had a strong intraday session in Europe yesterday on strong earnings reports and optimism and generally in the market, and this trend continued somewhat in the US session despite the very, very bad readings of the PPI figures and the consumer confidence, but the US stock market was mostly supported by the news on IBM that will has raised their forecasting, their sales forecasting for 2008, and they're announcing another share buyback program. Fixed income bonds continue the downtrend, closing just below the 50-day moving average, and treasuries yesterday rose on the back of the US data and the rate outlook, so it bounced off the 50% Fibonacci level at 115.12, currently trading at 116.01. Commodities: the weak dollar sparked off a rally in commodities. Gold was set new highs at $960.60 an ounce, and oil is trading at current new records at $101 at 43 cents. The trend resistance is coming in for oil at 103.54 cents. So what is going on? In the FX markets, despite of the very strong US PPI figures, the dollar fell on the speculation that Bernanke will be soft in tomorrow's testimony on the economy before the US Senate and be focused on the US growth before dealing with inflation. Euro dollar is in its highs above 150, and we see no signs of near resistant levels. The implied probability of the Fed funds rates is now indicating that 96% of the market is pricing in a 50 basis point cut at the next interest rate meeting at the 18th of March. Optimism in the equity market, as I told you, due to the IBM raising their sales forecast for 2008 and also introducing a share buyback program. Please notice that prior IBM was a large, partly a software, but mostly a hardware producer. This is the company has shifted towards insourcing IT operations from companies, so that IBM is coming out and raising their sales forecast could also mean that companies in a large extent, or to a larger extent, is outsourcing their IT operations, and this is done when you want to rationalize your operation, and this is pretty much not done typically in an uptrend in the economy. The current good news is that we see various sectors, excluding financials and real estate, are mostly based on a positive year 2007. That is, we see earnings realizations somewhat better than expected typically. But for the European session, we think that the weak euro dollar and the high oil price will make the growth in the European session be dampened somewhat. The calendar today at 9:30 GMT we have the UK GDP out. This is very important and very interesting in the sense to see whether the UK economy is following the trend in the US economy and slowing somewhat. At 13:30 GMT we have the durable goods orders out from the US, and at 1500 GMT we have the US home sales out. This is important because, as indicated yesterday by the S&P Case-Shiller price index, the US housing market is not contracting that fast, but still is a very slow mode, and we'll see whether this is confirmed by the new home sales out from the US today. Tomorrow we have also numbers out that is important. We have the ILO unemployment rate out from Germany, which is the labor union unemployment rate measuring. Then from the US we have the GDP annualized, personal consumption, GDP price index, and core PCE. This is important as it's going to show whether we have a US economy is slowing significantly down, or is somewhat more optimism to trace. On the 29th of February we have the personal income, PCE deflator, PCE core, and Chicago Purchasing Manager. Look for these numbers. Also on the 29th of February we have the Eurozone GDP, we have the unemployment rate and consumer confidence also from the Eurozone. Look for these numbers as they may indicate whether the US consumer sentiment or the US economy in general is moving somewhat more faster in their slowing down compared to the European economy. Today's FX trade is a dollar-yen trade. We are selling dollar yen at market with the stop above 107.30, and we are heading for a 106 to start with, and let it roll further downwards. Today's trading strategy in the equities, we are selling BMW on the back of the negative US consumer sentiment, mainly due to the fact that BMW has around 25% of its sales in the US. We are entering within the entry range of 37 to 37.75. We're targeting 35.28 initially, and 34 finally, and we're keeping a stop loss above 38.15. That was all for today's market call at Saxo Bank. Thank you for joining. We hopefully see you tomorrow.